Good morning to all traders. Welcome to this Tuesday's Market Insights video provided by Orbex. Stavros Tisius here. We've seen Warren Buffett bailing out pretty much at the weekend. No more stake at a number of airline stocks. Stocks are getting a hit. Energy stocks actually supported though because of the latest gains that we've seen in the oil markets. The US-China trade war escalation comes back now. The war is likely to re-emerge over here following the reiteration from Mike Pompeo that China is indeed responsible for the outbreak. The headlines for the day though, although might be also on that aspect, are going to be for the ECB. There is a very big decision today coming from the German courts whether the ECB's decision to buy bonds, I mean as many bonds pretty much, has a legal standing. So there is a court case there is the hearing actually going to be today. The North is pretty much calling that South should be, they want to enforce fiscal measures. But as we know, the South and North both are facing challenges along with the ECB, of course. Starting on the euro dollar, I want to, of course, continue to where we left last week. We're talking about this becoming potentially an ending triangle because this is the last, it's a W, X, and Y, right, wave. Now, I mean, it's still very early to say whether this will actually come to fruition or not. But for the time being, we can say that these corrective waves are actually happening, right? So we've got an ABC over here, ABC here, right? ABC for a W, X, and a Y for 3, then 4, and then 5. Now, I'm looking at this with the two different views, right? First is ABC, so we ended X here, and we're gonna move down for an ABC to take out 3. Okay, this is of course going to lead to new lows. Or, and because, of course, I'm also looking at the RSI hidden divergence over here, might be a case where we've got A, we're going to get a B, and then we're going to get a C to take out X over here instead of here, okay, which is very possible. So as you see, one opportunity would be seeing more downside than the other, okay. Now, if A wave ended here, now B wave could end anywhere between, let's say, 109 where we are now and even 108. Okay, so this is a very critical zone for me. 100 pips, one might say, is a big zone, yes, but indeed is a very critical one for the longer term because this will give us clues and clarity for the markets, euro-dollar markets going forward. Of course, today's decision is going to play its part as well. Yesterday, we've seen this decline actually going down to 109 because there is uncertainty, as I said, about the rest of the country's ability to take on such debt without the support of Germany, right? Now, jumping quickly on the dollar yen, nothing changes here. I'm still looking at this as an opportunity to the downside, at least in the short term, okay? Without that meaning that we might, without meaning we're not going to turn earlier. But since prices have remained below the 107, let's say, for a while now, I'm still expecting this to become another move to the downside as wave 5 of this move to the downside. Okay, so as you know, we have X up here, okay, and up there is wave Y, W, X, and Y. So we're expecting an ABC to end, right? So we've got waves A done, B like is nearly done. I mean, we are actually in the 5th wave of this wave that is going to take out a wave C. That can end anywhere below, anywhere actually below the 106.30 and up to the 105.20 or so, but there is good chances that this is going to actually come lower to around 105.50 at least because it's a very good activity level, and usually those levels are the ones that they're attracting both sellers and buyers. Now the thing is, on the RSI, we do see some divergence on the upside here But what we can expect now is we want to see a break below that level to validate this move at least in the short term, okay? So now the other pair I want to look is the Aussie. We've just had actually the RBA decision like a few minutes ago. The bank actually has decided to scale back on the bond purchases, which is a good indication for the markets. At least seems that whatever the bank has done so far, which was a combination of fiscal and monetary moves, successful, I would say, is successful. So that is supporting currently the USD dollar. What we see here again is not changing. I'm still expecting this to be a B and then a C. And we're looking here at an ending triangle. Do not forget that. So this is an ending triangle. And then we're going to get another ABC move to the downside. So now the question is, I mean, we reached the 50 Fibonacci retracement of this move to the downside. So are we going to start moving lower? It's very, very possible we're going to start moving lower. If we start moving lower, there's probably, this is 1, 2, 3, 4, and 5. We're going to get wave A here, and then we're going to get a B, and then we're going to get a C down over here to end this correction, and then shoot back up higher, okay? Now, I mean, wave B could come out to the 62 or so, but we could also slide lower. Since we're in corrective moves, it doesn't really matter how much lower we're going to get to. Now, the thing is, over here, as you can see very clearly, right, we do see a bullish signal, right? And we've had this move to the upside, taking out the extreme of the RSI. However, up here, we're not seeing anything, right? So it is possible that we are going to move a little bit higher, okay? Once we move a little bit higher, we're going to get a nice divergence signal over here, hidden, okay? So we could go up to the 61.8 extension. It's going to be over the 65 level, maybe the 65 cents, and then start moving lower. So this will be all for the day. Keep an eye on what's happening with the German ruling, because it's the critical headline for the day and also for the ECB's future, I would say. So speak to you again tomorrow.